Good day, fellow investors and traders. After half a decade of trading and investing stocks, I've never seen a pattern quite like what's happening in SMCI right now. The price action has everyone watching, but there's something crucial that a lot of traders and investors are missing. But before we dive into this SMCI chart, I need to be clear. This analysis isn't about the AI hype or the mainstream headlines. What I'm about to share comes from studying tens of thousands of chart patterns and price movements over the years. But before we get into that, our Profit Punch newsletter subscribers caught SMCI's 240% move, NVDA's 180% move, and recently banked over 200% on a portfolio, all from following the exact technical patterns that I'm about to show you. If you want to stay ahead of the major market moves and get real-time technical analysis, make sure to sign up for the newsletter where I share specific entry points and technical breakdowns before the big moves happen. Today we're going to look at SMCI's technical pattern that's revealing some fascinating signals about its potential next move. If you're holding SMCI stock or thinking about buying, you'll want to pay close attention to what I'm about to show you. So the first thing is that let's see what happened to SMCI last year or this whole year. So I do have a daily chart over here that you can see. This is the daily chart, and then this is the weekly chart. So the daily chart is to let us know exactly where to get in. The weekly chart helps us see the longer term view of things. And on the weekly chart, you always want to add your 10-week simple moving average and the 30-week moving averages. So this is for investors and traders. Traders never want to be in once price is below the 10-week simple moving average. Investors don't want to be in while price is below the 30-week moving average. So earlier this year, NVIDIA formed a very huge base. I started this newsletter in 2024. So here, there was a huge breakout. Everybody got to know, and then it did a 300% move in 3 months. It did it on expanding volume. That was a great move. Then it fails around the price of 100. Investors love round numbers. So whenever a stock reaches a round number like $100, $200, moves above it and then comes back down, just know that psychologically investors think it has reached the peak, but that's just technical analysis. Let's look at the fundamental analysis too. The financials have been great. Return on equity, we want to see something above 17%. This one has 32. Perfect. Earnings per share, we want to see an average of 30% over the last 4 quarters. This is blowing it out of the water. If it's accelerating as well, that's even perfect. It was doing this before, but then it has started to slow down. Revenue, we want to see revenue above 40% for super stocks, 25% for great growth stocks, and above 15% for any average stock. This is clearly doing everything right. Apparently news came out that, hey, something was wrong with the books of the company. But the fact is that the news came out when the technical patterns had already shown that this is not a good stock. So after it failed at 100, which I already told you is a round number, it came down, formed a consolidation. So whenever you see a stock forming a wedge like this kind of flag, inverted flag sign, it's struggling to move up, and then it crashes and it crosses below this trend line, just know it's heading in for a big bear move. And it did this below the 30-week moving average, which shows that this is a very big bear move as well. So investors and traders, everybody should have gotten out around $83 by then. If you hadn't gotten the sign, then you should have been out. And then around here on this candle, there's news that came out that, hey, these people were cooking their books. But the fact is that the price had already gone down. So that's one thing about the stock market. News comes out, but by the time the news comes out, the price normally has already been acting weird. And a lot of people have also been saying that it's time to buy SMCI because it moved up a lot already. But I would say that it is not a buy right now. It is not a buy right now. If you want to buy SMCI, please get someone to tie you to a flagpole so that you cannot click the buy button. You should be like Odysseus when he put wax into the sailors' ears so that they could not hear the siren that would cause them to wreck their ships. That's what's happening in SMCI. All the signs are very bad technically. When the price is below the 30-week moving average, don't touch it as a trader. Don't touch it as an investor. Just wait for the stock to return. When the price is also below the 10-week moving average and both of them are sloping down like this, just leave the stock alone. Please don't touch it. These are very bad signals for a stock, and I would advise you to stay away from this as much as possible. I see a lot of videos out there saying that, hey, catch the bottom, catch the bottom. But the thing in stocks is that the stock can actually go to zero. When it had gone from $120 to $60, it had gone down by half, and a lot of people were like, catch the bottom. But you can see what happened. From $60, it still crashed to 18, so you'd have lost 70% of your money from that. And from here, it can still go to $2. So we do not know. What we want to see is we want to see a big investor or a whale who is getting some good news come in, return the tide of the company, and it still has good fundamentals, and then we can buy it. Another bad sign is that we can see that while the stock is always struggling, on the times it's struggling, it struggles on low volume, right? You see the volume while it's struggling? It's lower than the weekly average, but when it crashes, the volume is a lot. These are very huge negative technical patterns that investors should know and should learn how to read charts and avoid such charts. So I hope you learned something from this. Please like the video, hit the subscribe button for more videos like this.